Alright, so in this video we're going to be going over trading styles and the different styles of trading. So the first style is going to be position traders. They're looking for long-term trades. They're usually holding trades for about a month or longer. They're looking for these quarterly targets. Their analysis is generally on the monthly, the weekly, the daily. And then they usually have 4-hour entries. Again, it's a percentage-based business, so they have larger stops, but they're risking probably about the same percentage as scalpers. They're not really taking these massive positions. They're just looking to have time on their side rather than price. So a typical position trade, you can see right here, this is a daily chart, so this is actually pretty wide, and you can see that just as an example, they'd go short here around this engulfing candle, put a stop above a high, and they'd be targeting this long-term low. It's kind of hard to see. You can see December right there. That's December's low. So they're looking for that long-term monthly, quarterly target. The next style is swing traders. They're usually looking between 1 to 4 weeks, sometimes 3 days, depending on how well price moves. But as far as generally speaking, 1 to 4 weeks. They're looking for monthly targets as well as weekly targets. They're usually looking for multiple weekly targets. So again, their analysis is going to be on the monthly, weekly, and daily, and the 4-hour as well. Their analysis is generally going to come from the 1 hour, but again, it's a percentage-based business, so they're looking at the numbers just like any other trader. So right here, where the position traders took this large trade, entering here and exiting way down there, swing traders will probably get out a little bit early. Instead of trying to hold for this low of December, they'll probably hold, you can see this is the 16th of January, they'll probably hold for those lows in January rather than trying to hold for the longer term target. That's the difference between a position and a swing trader. So you also have more my side of the market, which is scalping. These are short-term, 30 minutes to 8 hours generally. Scalping meaning that you're holding for the same day. So if you get in on Monday, you're looking to get out before Tuesday. Generally, you're looking for daily targets, daily highs, daily lows. So the thing that we have in common as scalpers with position traders and with swing traders is we're all looking at the same time frames. As a scalper, you need to understand how to analyze the monthly, weekly, daily, 4-hour, and 1 hour. Because your movement or your large price action movement is going to come based on those time frames. The 15, the 5-minute, the 1 minute, those are going to be used for entries. And as scalpers, we have to utilize price movements. We have to utilize price swings. And so the smaller our stop, not always, but we want a relative stop. The smaller our stop is, and if we're looking for a monthly target with a very small scalp stop, it makes it a lot easier for us to have those higher percentage returns. So the goal is to get a position type trade, but on a scalp type entry, if that makes sense. If it doesn't make sense yet, it will the further we get into the course. So again, here's just an example of a scalping trade. Swing traders, we're looking about here. Position traders would probably be looking about here. As scalpers, we're just looking to get out at that daily low before it takes out this low. And again, this is that daily chart, so this is just a rough example. We generally be in and out the same day. And we'll cover plenty of scalps throughout the course. That's what this course is focused on. So again, there's the position trade, the swing trade, and the scalp. And those are the 3 main types of tradings in the market.